One of the big topic of conversations here in 2025 economically has been tariffs. We've heard about them. They've dominated a lot of the headlines, but what is the reality behind the tariffs? What does it mean to you? So a lot of questions surrounding that. We're going to try to get into that coming up now. Welcome into Legacy Beyond Wealth. I am Ben George, joined by Rob Shelton at Axio Wealth Management to get into some of these tariffs. Rob, this has been, I guess, there's a lot of headlines out there right now, but I would say if you had to kind of narrow down to maybe the top five in 2025, and we're only a couple months in, but I think tariffs would rank up there, wouldn't it?
It absolutely would. In fact, I was down in Phoenix just a few weeks ago at a conference. I actually was asked to speak at it, and it was awesome. It was with 1,000 other advisors that were there, and these are advisors known as being top in the industry. The neat thing about it is we had down some pretty smart investment professionals that were there, money managers, and talking with them a little bit about it. It seems like there's been this big wave or maybe a fog of uncertainty that's settled in 2025. I would say after the election of Trump in 24 there in November, we had this nice little, they call it the Trump rally, where the market went up really, really nice. And now it seems like we have started to see some concerns as this fog has settled in and not exactly sure what the end destination is. And I would say a major ingredient of that fog has been these tariffs.
Yeah, it has. And you know, everybody, depending on where you get your news from, you're going to hear different things. So we want to try to present the facts to you. Make sure you just kind of understand what's going on and break down what it can mean and the economic impact, who wins, who loses. So just kind of bring us up to speed first, Rob, about, you know, what's happening with the tariffs and as of this recording, obviously things might have changed by the time this comes out, but as of this recording, what's the latest?
Yeah, I think, Ben, as we were talking just before this, it seems almost there's a new breaking news 3 or 4 times a day coming out right now because it's an ever-changing target with these tariffs. And I think that's what's really caused a lot of market volatility out there, is because there isn't clarity of, hey, this is the end goal or destination that we're headed to. All that we see is, Chinese imports being tariffed anywhere between 10 to 20%, 25% on Mexico and on Canada. Sometimes we're carving out certain industries to get 30-day exemptions, not some for others. I think as we take a look at this, a lot of people have kind of fallen into 2 camps. One, this is more like a negotiating tactic kind of been used, and they point back to Trump being on The Apprentice and, hey, this is a tactic to be able to get people to the negotiating table, and that hopefully these tariffs don't last very long. Then there's the other side of it where you look at it and they go, no, this is for real. He's serious, and we're going to see these stay in place for the long term. I think I would have to put myself in that latter camp. If we're planning with clients, we need to plan kind of for the worst and hope for the best, if you will. And so what does that look like if we have tariffs? Well, there's kind of 4 main things that I think that we would have that discussion with clients. That first one is the auto industry. 50%, 52% of the auto parts come from Mexico and Canada. Not to mention the new cars that are imported. So right now they're talking anywhere between $4,000 to $12,000 of extra cost on a new car purchase that is out there, which is unreal. Kind of go back to 2020. Ben, I don't remember that very well or not. The car market seemed to have a big increase because of the lack of supply that was there at the time. So I think that's one thing to take a look at. I think clients will start to think about how do they make that car last a little bit longer than the quick upgrade that maybe they're used to doing every few years. The other thing that we're seeing big is the steel and aluminum is going to be really, really difficult to get that at a decent price. So that's one that we see being there. And all of these tariffs come about with rising inflation costs, because you and I kind of know basic economics there, Ben. If I raise my costs and you got to resell something, are you going to just take that in the shorts and not have an extra profit that you're used to?
Absolutely not. It'll be tacked on top of it.
Yeah, it's exactly what's going to happen. And so somebody's going to have to pay for it somewhere. And the question is, where do we find that? Now, it was really interesting. Chipotle came out and said they're going to take it, at least in the short term, and they wouldn't raise any of their food prices. And so we'll have to see if that's the case with some of these businesses on the short term, that they might be able to absorb that to maintain a good customer base. but I know it's not sustainable long term for them. And that's why if this turns into a long term issue, we might have some industries that get hit pretty hard.
Are you ready to unlock the freedom to live your best life? Schedule your no-cost 60-minute discovery meeting with our team today. During this session, we'll take the time to understand your family story and financial dreams. Together, we'll craft a personalized roadmap designed to help you achieve your goals. Let's explore how we can unlock the freedom for you and your family to thrive. Just click the link in the description of today's show to get started.
Yeah, and inflation's been a big one too. I mean, we're already still kind of, feeling the effects of the recent inflation rise over the last few years anyway. So you tack on another bump, and that's going to hurt a lot of people.
It is. In fact, we're hearing the R word being used right
Right.
now, which is that recession word. And, when the president was asked about it, he didn't necessarily discount that that's a possibility that could be there. I would say I'm more pessimistic in the next 6 to 12 months. But as we take a look out, on the next 3 to 5 year horizon, there's some great fundamentals in the economy that are there. In fact, if we pulled the tariff conversation away, I think we would see the market volatility go away and we'd see a lot of successful things happen in the economy that would drive business and economic growth. But it is these tariffs that are kind of weighing there because of the unknown of where prices are going to be. So anyone out there that's looking at this, I would highly recommend that they have what we call a buffer account. This is where cash comes in to be able to ride out some times where it might be a little more volatile. I don't know if it's going to be 6 months to a year, but I think as we approach the midterm elections in 2026, we'll see a little more stability and clarity coming into play. And that's where the 3 to 5 year time horizon gets me more optimistic.
Yeah, it'll be interesting to kind of see how that plays out in the short term. What was the fourth factor out of that list, Rob?
Yeah, and I think that the GDP growth is going to be slow. We're sitting there at that conference, and the Atlanta Fed puts out a real-time GDP indicator, and what that GDP is kind of measures economic growth. And we basically went from like a 2% growth rate, and right now it's about a -2.
Okay.
That's a 4-point swing. And so that just shows you the pessimism that's out there if these tariffs really do go in. And then we have retaliatory tariffs that take place. So you're looking at a lot of business owners that are trying to say, well, what do I do? Do I buy steel at higher prices, or will they be cheaper in 2 months? And so it's kind of this deer in the headlights, let's wait and see. But if no one's investing in the economy and it's not growing, we're just kind of hitting the pause button. That's where I see that short-term pain maybe coming into play for some people.
I got you. Well, obviously, nobody knows what the future holds, but I know everyone wants to know, hey, what does this mean for me? What does this mean for investing? Because, in recent weeks, we've seen the market take a lot of red, right? That's kind of the simplest way to put it. So what do you think? What's the impact here? And what are you kind of watching, Rob?
Yeah, in fact, I just got off the call before we got together here, Ben, with a client, and one thing that we're looking at, they're a newer client that just barely came on board, and a few things that we like about market volatility. One, it allows a client to be able to invest new dollars at a cheaper rate. So it's time to be able to look and say, hey, does it make sense to put a little more money in now that maybe was sitting on the sidelines and have it work for you? The second thing I love is tax loss harvesting. And if that's not a conversation your financial professional is having with you, we should really get together and chat, because that's really where during this point in time you could make some lemonade out of some lemons. And then I would think it's always good to just take a look at your cash balances and make sure that we got enough set aside in cash and our expenses that we're able to make it through the next 12 months till we can kind of see some light at the end of the tunnel from maybe this turmoil that's taking place.
Well, how much does emotion play into this process too? I know that's a big part of behavioral finance, is the emotion that weighs in, especially when the markets is rough. And nobody can look at the numbers, Rob, and see that come down so much and get excited about it. Even if you are a very diligent investor and you know it's an opportunity, it still can bring out some emotion to see the market behave this way. So how much of it is emotional, and how do you take that out of it?
I think it is a good portion of it is emotional. I mean, like I said, you watch the news and there's just so much that can be reported on, and sound clips that are out there, and it's a very emotionally a charge, especially when you start talking about people's money, their ability to be able to live the life they want and their financial freedom, and all of a sudden they're seeing some big losses that take place. I think this is where a solid investment plan really comes into play. And so if you're working with a good qualified professional, they should be able to talk to you about it and say, here's what we've been planning for, and this is how we make it through, to be able to calm those emotions. I know in every one of our investment plan meetings that we have with clients, we're reiterating, okay, if the markets turn, here's what we've been planning as a contingency. If that's not a conversation that you're having, we'd love to have that conversation with you.
Yeah, that's a great point. That's exactly where planning comes into play. And this should be something that doesn't catch you off guard, right? Maybe the timing of it might, but the fact that the market's pulling back shouldn't be something that you're unprepared for. So if you haven't taken those steps for your investments and your financial future, please take the time to do so. And if you want to get in touch with Axio Wealth Management, you can do so. In the contacts or in the description down below, phone number, also the website, but also take advantage of that 60-minute discovery meeting. It's the time and opportunity to kind of get to know Rob and the team there, but also a chance for them to kind of get to know your situation. What keeps you up at night? What are your worries? What are your concerns? But also, what are the opportunities there for you as well? So you want to do that again, axiowm.com, but everything down in the show description. Any final thoughts, Rob?
No, I think that encapsulates it. We'll just, the biggest thing is to, like I think you mentioned, don't get too emotional. Make sure we got a solid plan in place. And then sometimes we have to hunker down and wait out the storm a little bit. But I do believe there are sunnier days ahead of us.
Absolutely. Well, we appreciate you joining us here on Legacy Beyond Wealth. For Rob Shelton over at Axio Wealth Management, I am Ben George. Take care.